You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out with hopefully your favorite bunch of options characters, at least the bi-weekly crews. That's us. It's time for the old option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the old network. You know how to get it. Hopefully you are getting it mainlined into your ear holes as we speak. You can get it live, the live version, every Monday and Thursday, noon Central. So if you like the show, you like to subscribe, you got some time, maybe you want to kick back, you want to have your lunch, you want to kick back and relax with the Option Block All-Star crew. Maybe while you're at your desk doing something else, you can listen to us because it's live, it's nice. Go ahead and do that. It's kind of fun. We like to have you guys, anybody ask us questions, see what's trading, see what's on our radar, what's coming across our tapes, maybe hear some strategery, all that good stuff. Monday and Thursday, noon Central, 1 p.m. Eastern, via Mixlr, or get it by the usual platforms, the iTunes, the TuneIn, your Stitchers, all that good stuff. And hit us up. Questions. We'd like to hear from you guys. You guys always suggest interesting ideas, take us in weird directions, which is kind of fun. We like that. So hit us up. We do like to hear from you guys. And joining me on the program today, the yins to my collective yang, the dark side is to my collective light side. Or she said the collective dark side. It's to my singular, but still awesome light side. Let's see what we got here. Let's spin the wheel. Oh, here we go. Starting off with the man who hopes one day to be able to tell you his origin story. It is Mark, the Greasy Meatball Sebastian.
A great origin
story. So far, at least, it looks like it ain't happening today, but we still got some time. Early voting, we still got like 20-odd minutes, 30 minutes.
Come on,
so
people out there.
Maybe people can rally. We shall see.
You want my origin story.
The origin story. First, there was a radioactive spider, and he was born on another planet, and then he had some mutated genes, and then it all mixed together into the mess that we now know as the Meatball. Welcome back, Mr. Meatball.
Hey, good to be here.
And also joining us from a land where I don't know if I'm still persona non grata, we shall see, but I was their greatest champion for a long time, and then I dared speak truth to power, and look what they did to me, listeners. They just banned me wholesale. It is Uncle Mike Tosaw from that little hamlet that shall not be named, but we'll name it anyway, called St. Charles. Uncle Mike, welcome back to the show, sir.
You were spreading lies, my friend, and I'm doing a lot of damage control. I'm hoping to get you back on the good list in this town, but after those lies were spread, I don't know if I'm going to be able to do it.
You see, you speak truth just once in that police state known as St. Charles, and see, that's what happens. They shut you down. Big Brother's always watching, so pay attention while you're eating your Skippy's Euros. Maybe you want to look over your shoulder while we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Let's see what's trading right now, shall we? It is a little bit past noon central here, and most of the markets, they've kind of been in this kind of saggy, weakened state most of the session today. The Dow actually back now to about unched. It was off a little bit worse before. Earlier in the day, S&P off not even 0.25%. We're actually hovering between 0.25% and 0.3% or so. The NASDAQ taking it more on the chin, off about 0.8%. Tech giveth, tech taketh away. Today's a taking away day. And all of that red, even slight on the screen, means a little bit of green on the old VIX monster, up about 0.75 of a handle, right around 1280 or so. And let's see. Yeah, we did, got down to about 1232. But yeah, that's neither here nor there. Let's see what's lighting up here on our collective tapes as I check out these quotes here. Let's start with the Greasy Meatball. Mr. Meatball, sir, what's going on? Obviously, we're seeing a lot. Last week there was that joy, that effervescence in the market as people were thinking, oh, maybe we will come to the table on this trade war, and then maybe cooler heads had prevailed, and then we realized perhaps over the weekend, no, it's actually the opposite. Hotter heads are prevailing. Trump threatening to add quite a bit more, I think $200 billion in more tariffs, the largest in some time. So all that causing some consternation. What say you, sir? What's on your radar today?
Nothing. I'm hanging out. You know what is really driving these things? Amazon. There may actually be a chink in the armor. There was a couple of stories out. I mean, it started with kind of they may have some like data leakage issues. But I think the other major piece, and I think this is actually more interesting, was, it was the first time I've heard some discussion of them potentially splitting web services from their sales unit, their retail sales unit, and that is bad for both sides. Web services is where they make their money, retail is where they grow, but they can't grow without the making money piece. And the problem is the growth is starting to affect their making money piece. Microsoft is having Amazon's lunch in the web services space right now, because they say, hey, look at us. We give you great web services and we don't go after your business. Whereas Amazon does not seem to, can't seem to say that. I mean, they're going after, there's not a single one of their clients that they're kind of not chasing down. And so there was some talk of them potentially splitting up. And you can see Amazon's up 2.5% on that. Apple looking soft today too. I mean, your normal FANG stocks all look soft, but Amazon and Alibaba look really weak.
Yeah, Amazon's really it's got a lot of news coming out today. The big one, obviously, of course, well, big to some folks. There's bigger news lurking out there. We'll get to that in a second. But the big to some folks, of course, you're right. And this is kind of something I've alluded to so many times here on this show that, Amazon has just this, at least they used to. Maybe it's lessening, maybe it's loosening a little bit. But they had this chokehold, this stranglehold through their AWS, their Amazon Web Services. They really powered. They were very much the backbone of a lot of the internet. That's why when AWS has issues or goes down, you see so many major sites that you're used to using just go down as well. It is really, they have become, outside a lot of the public eye, obviously people in the space know, but outside the public eye, they really have become this just leviathan in the world of web hosting and web services and cloud services. And of course, some recent outages, and some of that bleeding over into their retail side as well. They had their much publicized outage on Prime Day back in July, not a day when they want to go down. So that was a day when obviously their infrastructure failed them. And now having a few more well-publicized ones. And now you're right. Trump kind of going after some of these names. They're kind of very frequent whipping boys for him. Bezos also owns the Washington Post, so the two don't play nicely with Trump, so he goes after Bezos, and back and forth we go. And so, yeah, people are talking today about maybe splitting that off. And, it's kind of funny. It seems like, for whatever reason, and it does seem like the worm has turned for a lot of people on Amazon. You could trace a lot of it back. You can just look at the sentiment, the emails, and the feedback we get, and looking at articles collectively, and it just seemed like there's been a sentiment change on Amazon. You could trace it back directly to when they bought Whole Foods, because all of a sudden it seems like that was the clarion call, that was the wake up call for a lot of people out there. It wasn't them gobbling up everything through AWS. It wasn't them putting out, doing a lot of things on the retail side. And I'm not saying I'm anti-Amazon by any means. I buy way too much Amazon stuff. In fact, I may go to their new store later today. Spoiler. But but it is still interesting to see all of a sudden the rhetoric shifted. And people, when they saw that they made what to a lot of people was an outside of their bubble kind of play, it really woke them up to the fact of the reach and the grasp and the breadth of Amazon. And that really, all of a sudden you start seeing these editorials, you start seeing these new bills going after them in their home area and around Seattle and other places. You're seeing Sanders and others getting nice political points at their expense. And it's become definitely a much more demonized company in the last few years, ever since that Whole Foods deal was announced. So it does seem like, for whatever reason, maybe would you concur, Mark, that since when they decided to gobble up people's organic hummus, that's when the worm turned on Amazon?
I think there are a couple of major ones. One, yeah, I mean, you buy Walmart, you buy Whole Foods, it pisses off a lot of people because you ruin the product, ruin a good culture there. But two, I mean, take Walmart for instance, right? Walmart said if you're going to basically told all their suppliers, if you're going to be one of our suppliers, you can't host on AWS anymore. And Microsoft came out last week and said that every time Amazon goes into space, it creates a massive new clientele for them because their competitors no longer want to use Amazon for all their hosting. So, there was some news that Amazon's doing a big push to try and get into the payment space. Well, guess what? Square, Twitter, PayPal, eBay, Venmo, all the web servicing that they're doing, gone. Straight into Microsoft's pocket. So the rumor out today, like it was in the Wall Street Journal, was like, hey, they're talking about splitting because the relationship between Amazon and AWS is starting to actually cause problems for the bulk of their profitability. But the problem with splitting is that Amazon retail cannot act the way they act without AWS to lean on. And so they've got themselves stuck between a rock and a hard place that they really want to expand. I'm going into pharmaceuticals. Guess what? You just lost CVS, Walgreens, Blue Cross Blue Shield, blah, blah, blah. All that web service is gone. And then that's an issue. And I think Amazon has, if it's not regulatory problems, it's structural problems related to how it makes money. And it will be very interesting to see, whether they're able to maintain this stranglehold. Look at the last quarter. Microsoft grew its business greater than Amazon. They had Amazon was in it like a distant second in terms of new clients.
Maybe you could say also they're growing a smaller pie. Is that percentage-wise? So maybe they're growing a smaller pie. Obviously, Microsoft and Azure, not small, but smaller.
No, in terms of like the actual net business, Microsoft outgrew.
Interesting. But we're burying the lead here in Amazon. Obviously, the biggest deal, which I'm surprised the stock is not up threefold today. They announced the first ever Amazon Go store outside of Seattle, and it's right down the street here. Right down the street here from the studio. I may be going there later today to check it out. The notion of just walking into a grocery store and walking out again without talking or dealing with any cashier, and that's appealing to me. So
I am the opposite of that. You know that?
Really? You want the person doing all that stuff?
I love, when I'm in the checkout, I know. So in the beautiful town of Riverside, we have Riverside Foods. I know all of my checkout ladies. When I'm walking through, they're happy. They want to know about my kids. They want to know how I'm doing. It brings that sense of community that maybe a lot of people don't want, but I really like it.
No, in the heart of Chicago, there's none of that.
No, but
I don't know if you live here for the heart of for community. Mr. Uncle Mike, sir, what is lighting up your tape? And are you planning after the show to also hit the new Amazon Go store, sir?
No, not quite. I'm with Mark. I like the community. The talk of the town in St. Charles right now is how much They hate the guy that I co-host with, so I'm kind of getting some flack for that. But yeah, I think it's an interesting predicament with which Amazon is in, to say the least. Yeah, I think on the macro level, or in the world with which I live, in looking at it, I think trade wars are the big talk of things right now, with where we're going with things. Also, we have my beloved precious metals are quite a bit down right now. Thank the Lord for the put option. Just want to say that. But with that being said, at these low levels, if I didn't already own them, I'd kind of think they were a buy at this stage. With the strengthening U.S. dollar, I think that's one of the main things that's driven down the metals. A couple of other things of note: my beloved fruit company is down almost 2% on the day, $4 on the day. Markets themselves down roughly 10 points in the S&P, so nothing. It's a down day, but it's nothing too strenuous by any means. And I just think that on the macro stage of things, when this market, if it's going to rally, I think we're going to need some type of good news, at least until earnings season starts again, in terms of the trade wars. And I have a theory that we might get it going into the midterm elections.
Oh, you always theorizing out there in St. Charles. Earnings season mostly in the rearview mirror. There still are a few names popping off after the bell today. A few you might have heard of, actually, like Oracle. May have heard of that one. Right around 49 and a quarter going into the show today. They're pricing in a little bit shy of $3, about 275, so a little bit more than 5% out there. I don't have the ORATS report on that, so I can't tell you how that compares to historical. Hopefully they'll crank that away for us and we can see that. Also, FedEx coming out after the bell today. They're trading about 255 and change up there, so a little bit north of Oracle. On the price side, straddle about $8.50, or about a little over 3% out there in FedEx land. So there still are some names you may have heard of. Earnings season not entirely past tense, mostly, primarily, but not entirely out there. And Uncle Mike, really quickly, we got some love out there for our listeners, what they want you to talk about here this week in the old Strategery. So we gave them 4 choices: why you hate Apple and love SLV, how to trade the wheel, trading in a low implied volatility environment, or once again, the origin story of the greasy meatball. What do you think is winning right now, sir, in the early voting? You still got about 20 minutes or so.
My guess will be trading in a low volatility environment.
Right now, it's actually the wheel. It was actually equally tied for early on, and then now it's the wheel, 33%. So holding a slim lead over trading low implied vol, and also the origin of the greasy meatball.
Origin of the greasy meatball. Everybody wants that.
You can't get that up there. We'll see. You got more time, Mr. For some shenanigans behind the scenes.
Get in there.
Very few people know exactly how he got his nickname. I'm one of the few that does.
Oh, so maybe you can get that secret story. Meanwhile, let's keep on rolling. There's some other stuff popping off. Let's get to it. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Funky tunes mean it's time for funky action on the old show. It doesn't get much funkier these days than our old friend, the makers of fine electric automobiles. They of the Tesla infamy. They've kind of been all over the place of late today as well. They had about a 12 handle range. They're on the upside of that right now, low 300. They traded 299.5. They got over 300 briefly this morning. They got as low as 288. All this kind of on the news. A couple of different stories coming out that seemingly weren't that great for them, yet they're still rallying today. So go figure. First off, remember that Saudi fund that Musk tweeted about, saying, "Oh, funding secured for our go private deal." Well, they actually turned around now. Not only did they not do that deal, but they invested about $1 billion in a competitor. This is Lucid Motors. This is going to fund Lucid Motors' 2020 commercial launch of their first electric vehicle, the Lucid Air. So again, $1 billion for this fund, not a heck of a lot. Still, $1 billion is nothing to sneeze at. And this is going to help this new competitor come to market. So Tesla probably not overly enthused about that. I understand why they want to maybe spread out, diversify a bit in the old in the old electric vehicle market, so that makes sense on their part, but perhaps a little bit opposite of what he was preaching not too long ago out there on the old Twitter machine. And also talking about customers probably seeing longer response times to get their Model 3s. Not good news there as well. Yet all that doesn't really seem to matter. Stock up 4 handles today, or about 1.5%. So go figure, another day, another bit of Tesla story. Let's go instead to the old options machine and see what's lighting up out there on our downside puts. And with all this back and forth today, we're seeing about 120 of these 50 puts hitting the tape today. 70,000, almost 70,500 open on that strike. And almost 70 of the 10 puts in Jan, with about 26, almost 27,000 open on that strike. Those are trading about 8 cents. And the 50s trading about 85 cents or so out there. So those have kind of been all over the place of late. Let's see if our longer term put friends are also lighting it up. The 50 puts, oh wow. 50 puts on the tape 40 times in 2020, but that's not the story. It's the 20 puts in 2020. So yes, the Jan 2020 20 puts. Say that 5 times fast. I dare you. They are trading right around $1.20 right now. 1,470 of those hitting the tape today. That's quite a few. 17,643 open on that strike. So not quite 10% hitting the tape today, but pretty close. Maybe more going up on the end of the day. So 2020 20 puts are where the action is out here in Tesla land. Mr. Meatball, how many of those are going into the Carmen Line Fund today? You can tell us.
The thousands and thousands and thousands. We've now cornered the market on Tesla puts.
I knew.
If you want to buy them, you got to buy them from me.
You are the Hunt brothers of Tesla downside. I knew you were up to something over there.
I've cornered the market. Me and Mortimer.
Yes, turn those put machines back on. All right, speaking of, we're talking puts, but the rest of the odd block's pretty much a call palooza over here. Lots of call love going on in the odd block today. Let's kick things off in Cigna. Ticker symbol CI. Trading today 198.65. This is the name. I haven't talked about this one in a while. They do about 6,000 contracts a day. Today doing a little bit more than 4x, about 23, almost 24,000. 16 to 1 calls over puts. And what we saw out here was there's a lot of paper in the front month, but that's not where we're looking. We're looking a little bit farther out, listeners, all the way out to the lovely time known as January 2019, where we are joined by quite a few of the Jan 220, I should say, calls. I got the Tesla puts in my head with the 2020. Jan 220 calls, a block of them going up 12,271 for $2.90 right off the offer there. So lifting those bad boys. Total of about 16,600 going up on the day. All of this on pretty much no open interest to speak of. So it does appear to be what it seems like on the surface. That's a bit of upside opening call love here in Cigna. There is an earnings cycle between now and then on the 1st of November, so not quite an earnings play, but it is baked in there. Let's look at the chart here, and let's see what's up here from a Cigna perspective over the past year. A year ago, this one was trading not too far from where it is right now, about 10 handles lower, about 185 and change. Is that 180? Actually, I'm going to say 186 and change, and so it's 198 and change, so a little bit more than $10, and but a little bit shy of where it is right now. It rallied all the way up to about 227 or so back again, end of January. How many stocks have we seen that for now in the odd block, where they hit their apex? Right before the beginning of February. What could have happened in the beginning of February to derail so many names? I wonder. I stroked my chin in surprise. And then it kind of sold off pretty heartily, got down to about, earnings didn't help either around all that time, got down to about 163 back in March. And it kind of vacillated around there for a while, and it's kind of slowly been making its way back up to where it is right now. So it's been all over the place over the better part of the last year. Even though if you just looked at it, it looks like just about 10 handles, but it's actually been all over the place since then, a wide range. So these Jan 220s, not entirely out of the realm of reason. Mr. Meatball did hit 227 back in January. Looks like our friend here betting on a repeat of Jan 2018, only this time for Jan 2019. What are you thinking, sir? Are you agreeing with that? And what do you think of these near-term upside call love here in some Cigna?
Well, Cigna is just the best company ever. They are super significant. They're signatural. And no, I don't know. But yeah, I mean, that's a lot of calls to be bought, and it clearly points toward somebody thinking, hey, we could be moving back to the old highs. These do really well if we make a quick move higher. And if you look at a chart of Cigna, it does look like it's it's finally blasted above its 200. Another 10% up from here, and those calls are going to be pretty nice.
They will look pretty nice, and this is why I tossed you, sir, for the quality wordplay and puns that you throw our way every week, sir. We love it. Good stuff. All right, let's move. I bet you right now, someone out there listening probably has a Bed Bath & Beyond coupon in their mailbox or on their desk or somewhere else. I think they just pepper the earth, or maybe I think they finally started dialing that back. I think they're just doing more across the board discounts. Maybe they realize spending millions of dollars sending out these coupons every week maybe wasn't the best play out there. Either way, we're talking about Bed Bath & Beyond next, if you could guess. Ticker symbol BBBY. Trading today at $19.40, up $1.33, or up about 7.5%. So wow, off to the races out here in Bed Bath & Beyond. I'll have to take a chance and see what some of the old news was. Doesn't appear to be. No, it's not earnings. Earnings is not till next week. So something is afoot out here in Bed Bath & Beyond. This is a name that does about 8,600 contracts today, doing about 3x that, a little more than about 25,000 contracts out here on the tape. 5-1 calls over puts, not exactly surprising given the fact that we're kind of off to the races here in Bed Bath & Beyond. And what we saw, surprise, upside call love. Yep, it's kind of our theme of the Odd Block today. In particular, let's go out, not quite as far as last time, but out to the Nove 20s. So pretty far out of the money yesterday. Today, not as much. Only about 70 cents out of the money here. We saw this morning 8,800 of these bad boys going up for $1.1980. So almost $1.20. Weird splits, obviously, above through the offer. That's how bad they wanted to get these bad boys. They were at $1.16 when they paid nearly $1.20 to get 8,800 of them. Total of nearly over 13,000, actually, going up on the day. 13,380. So a lot of love. All openings, only even the early blocks, only about 3,000 contracts open on this strike. So let's go look at a chart and see what it was. About a year ago, they had bad. Maybe they pre-announced their earnings. The earnings are right around this time again last year. Actually, almost exactly a year ago was their earnings. And they kind of took it on the chin back then. They dropped from about 28, 29, all the way down to about 26. Actually down to about 22 right after the earnings. So they got clipped quite a bit. And that was a year ago, and they kind of vacillated around that level, 22, 23 for some time. Got clipped again in earnings, down to 17. So it's kind of been a rocky road. They've been vacillating in that mid to high teens range ever since, until today, when they're maybe starting to bust out of this bad boy range. Mr. Meatball, call love continuing in the Odd Block, this time in Bed Bath & Beyond. First off, do you have a coupon sitting in front of you for Bed Bath & Beyond? I think it's for 20% off. And then B, what do you think of these calls, and what the heck, what's going on in Bed Bath & Beyond today? Someone buying them?
They just got a big upgrade I saw this morning, where they got pulled from market underperform to, hey, this company might not go out of business. But there's still a lot of risks around Bloodbath & Beyond, and I'm not sure that this is. I get why you might make a near-term foray into a long position. They've got earnings coming up. Maybe they're gonna have some nice performance out of there. It has made a nice move off the bottom, but that's a pretty significant bet for a name like Bloodbath, which is seeing problems in both Bed Bath Beyond and Bye Bye Baby, although the bankruptcy of Toys R Us might be a piece that is really helping Bye Bye Baby. It'll be interesting to see if that's the case.
Yeah, everyone's trying to jump into that space. Target, Walmart, everyone trying to be the new Toys R Us here for the world. I'm looking here, Raymond James analyst Bud Bugach.
Oh, I love Bud
He's
Bugach.
my favorite of the Bugach analysts. Upgraded Bed Bath & Beyond to market perform from underperform. Apparently that's enough to drive it like this. But you're right. And I've always been concerned, not so much about the bed and the bath, the beyond part, always underperforming in their earnings. They got to work on the beyond. What was that old episode? Was it Family Guy where he goes just floating into space in the back of the store when he goes beyond? It always cracks me up whenever I think of that store. But apparently I'm alone. No one else laughing at that one. Still, yeah, interesting stuff. Bed Bath & Beyond, you're right. There's people, the vultures have been circling that one for a while, and maybe, perhaps, if this analyst is to believe, and be believed, and you know we take a dim view of analysts here on the show, but he's at least moving the stock today. So something afoot out there. And someone piling into these calls, maybe they're buying what that analyst is selling out there. Putting real money behind these faux analyst dollars going on out there. All right, let's see if we can keep the call love alive. Yes, we can. Trifecta of call love here in the odd block today. Going to wrap it up here with Antero Resources Corp. Ticker symbol AR, trading today $18.83, up 22 cents, or about 1.2% out there on the day today. It's a name that does about 2,400 contracts a day. Today doing about 15,000, so quite a bit more. 28, almost 29 to 1 calls over puts. And yes, once again, the streak's alive. Call love, near-term upside call love going on up here again. This time we're going out to Nove yet again. The Nove 22 halves. A big block of these going up on the offer this morning, 24.25 cents, 7,075 times, all opening as the day went on. Another 3,000 have gone up and changed, over 10,000 up on that strike right now, so well over 2x the OI out there, all opening out there on AR land. Also worth noting, some small calls, blocks going up also in OCK. The OCK 20s doing about nearly 2,000. And those look like they're pretty much buying as well. And 1,500 or so of the Jan 22 halves. Those are a little bit more mixed, and there is size OI on Jan. So there could be something else afoot out there. Probably maybe related, but you never know out here on these names. Smaller size, though. The big size definitely in the Nove. Let's go to the chart and see what it tells us out here. All right, a year ago, it was trading about $20 and 20 and a half or so. So a little bit shy of $2 north of where it is right now. It's kind of vacillated all over the place since then. Got down to as low as, about 16 and change back in February, early February yet again. Go figure. And then I got as high as about 22.60 back in mid-July or so. So it's kind of had a decent range, right about 6 handles or so over the course of the past year. We're kind of on the lower. We got down to 16 and changing not too long ago, back about a week ago. So it's kind of been on the upswing ever since. And looks like someone thinking the upswing is going on again, and they're willing to put some calls to work, in particular, some cheapy 25-cent calls out to the 22 half strike. Mr. Meatball, take us home. What do you think of yet our trifecta of near-term upside call love, this time in Antero Resources Corp?
Well, I'm a huge fan of Antero Resources Corp. Some people are anti. I am pro-Tero Resources. And, that does look to be there's already a bunch of open interest on that strike, surprisingly. And so you have to wonder whether, when was that big block bought? And it's been open interest on that strike has been around for several months. So there is definitely some bullishness. I'm wondering whether somebody is doubling down. The strike underneath, we saw most of that, there's a decent OI underneath there too, about 5,300. We saw most of that develop in the last couple of weeks. And it's almost exclusively from August, and then a couple of trades in August, and then one on September 11th, actually.
Yeah, it's funny. That's kind of the first thing I did tonight when I saw this in the report is, let's see, there's a size OI, and we go back. Maybe that's recent. Maybe they're piling in. And no, you're right. It's been open for a while out there. So it's not like they bought some last week and decided they needed more this week or closing them out or anything like that. It's all recent. Yeah, and the Nove stuff looks like, so maybe they are legging into funky ratios a little bit at a time. That would be weird, but hey, it's called the odd block. So we don't call it that for nothing. We're going to put this one in the to be watched category, listeners. So this one has the feel of perhaps something percolating out there. You know what? Tell you what. We'll be generous. We'll put the Bed Bath & Beyond in there. Tell you what, we'll put them all. We'll put the Cigna in there too. So we'll come back to these in some indeterminate point in the future and see how our friends are doing out there. Speaking of our friends, it's time to see what you guys, our friends, want Uncle Mike to talk about. It is time for the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Uncle Mike, I need a drum roll for this one. Are you ready, sir? Are you ready to learn your fate?
I am ready.
Are you prepared? I need like a drum roll or Jeopardy theme, something going on in the background there to heighten the tension. Instead, we'll just do it ourselves with just tense voices. Are you ready? All right, here we go. Let's see. Coming in at number 4 with 17% is hating Apple and loving SLV. So we're not doing that. And then tied, that would be number 3, because tied for second is trading in a low implied volatility market, and also the origin story of the greasy meatball with 25%. Once again, falling short, the greasy meatball. Number 1 for this week, our topic du jour is how to trade the wheel, sir. So have at it, a.k.a. the triple income strategy. I know one of your favorites.
The wheel.
The wheel. The wheel.
The wheel of destiny.
The wheel.
The wheel of
I like
destiny.
that. Have at it, sir. Wheel us, please.
All right. Well, as disappointed as I am that the meatball didn't get his number 1 this week, but maybe next week. We'll see. It took a while for the history of the WWF title from 1984 to 88 to make it through, but you never know. I think you'll get your day, Mark. It's coming. But anyway, in terms of trading the wheel, what I wanted to go through today is what are some choices that you have when you're doing a covered call on a stock. The stock's down in value, but you still want to own the stock, but you still want to collect premium on it, and you don't want to give up the stock at a lower level. It's kind of a conundrum with which we're all in. So here would be an example. XYZ stock's trading at $50 per share. You buy it at 50, and you're consistently selling the 55 calls every month or the 52 half calls every month, whatever the case may be, or you're selling those puts, whatever it is. And let's say selling the puts, of course, if you don't own the stock, selling the covered calls if you own the stock. So let's say that all of a sudden 1 month the stock goes against you and it's down at $42 per share. Well, you bought in at $50 a share, and you really don't want to sell it at $42 a share because you believe that the stock is a good long-term holding. You believe that what happened to the stock is just temporary and that the stock will hold up and not really go down that much more. So you have some choices at this point. And that's what I wanted to go through today because I know a lot of people, I've talked with them about this, and when things like this happen, what do you do? So one choice would be maybe sell a 44, 45 call, just depending on what strike prices are offered. So the advantage of that is that you'll get the same income or a very similar income that you had back when the stock was up at 50. That's the good part about it. And if the stock stays the same or goes lower for that matter, then that's a great trade for the income section of this trade. Of course, another thing that you could do, you could just hold on to the stock. And holding on to the stock is something that could make sense if you believe the stock's going to come back relatively quickly. Sometimes I've done that, and I've done both of those choices. I've actually done all 4 of the choices that I'm going to mention today. Now, the third one that I want to mention, something with which you can do that I've done on occasion that I think I believe 3 chapters in my book on this, and that's the 1-by-2 ratio repair strategy. So let's say the stock is at $42 per share. One thing with which you can look at is to see what are the prices of the 45 call as well as the 50 call. Now, I'm going to make this math extremely easy, and this may or may not work, depending on the stock with which you're in. But let's say that the 45 call is trading for $2, whatever month you want, and the 50 call is trading for $1. You own 100 shares of the stock. So at that stage, what you could do is you could buy one 45 call while owning the stock. Now, you can do this all in one order ticket. I'm just explaining it one leg at a time for sake of simplicity. And then you could sell 2, not 1, but 2 50 calls. And by doing that, what you created was a 1-by-2 ratio spread along with owning the stock. Now, how would this work? Well, first thing that always comes up whenever I explain this is, well, doesn't that make me naked if I only own 100 shares of stock? No, it does not at all. And the reason is that one of the short 50 calls with which you sold is covered by the stock itself. The second one is covered by the 45 call with which you bought. So essentially what you're doing is you are selling a covered call to buy a 45-50 call spread. Now, of course, the advantage of that is if the stock is to rally back to 50, you essentially have double leverage from 45 to 50 at no cost. Now, of course, it doesn't work that way if you close out the trade before expiration, but that's something with which you would need to manage. And, of course, the disadvantage would be that if the stock stays the same or goes down, you didn't make any money on the income. Also, the disadvantage would be you'd have a limited upside, which you had already in a lot of ways if you're doing something in the realms of a covered call. Now, let's say that you're not looking for the limited upside. You have a concern with that. Well, here's another thing with which you could do. Perhaps sell a call spread. If a stock is down in value and you've been collecting income on it for a while or just right away, whatever the case may be, you want to continue to collect income on it. I think that that's a situation with which selling a call spread might make some sense. Now, what you could do in this example, perhaps sell the 45 call, maybe buy the 47.5 call if you don't want to give up that much upside on it. And by doing that, you then would collect income just like you would on selling a covered call. However, with the 47.5 call in place, then your upside limitation is only limited at 47.5. Once again, you're not going to collect as much income, but if this stock comes barreling back, then you have the upside capped you have the hedge capped to where it's not going to hurt you all the way on the upside. So to review, there are four choices that I believe you have when a stock is down in value and you want to continue to own the stock while still being in a wheel trade type of strategy. The first one, of course, is just hold on to the stock, be patient, wait for the stock to come back. Second one would be sell a covered call at a lower level. Advantage, you still get income. Disadvantage is that you're limiting your upside to, in a lot of cases, a loss. Third choice would be the ratio repair strategy that we went through. And then fourth choice would be selling a call spread against the stock that you own. So if you do find yourself in that situation, these are four choices with which you can take a look at, and hopefully one of them might work for you. And that is the strategy block for today, folks.
There we go. Well done, Uncle Mike. I just noticed that it's supposed to be a flash poll. We put up just a very brief poll. Instead, I think I actually set it for 2 days. So people are still voting as we speak. It's going to be going for a while. Right now, trading in a low implied vol environment is not winning. So there we go. People, you got to vote before the segment. Otherwise, it's all fun, but it's moot. So when the meatball tries to bump up his origin story, it won't count. Not at least until next week. But that means we got a little bit of time, listeners. Let's get some of you guys on the show. It's time for some of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. You know how to hit us up. At Options on most of the major social media platforms. The Options Insider on Facebook. Don't ask us. That's just the way it rolls. And then, of course, questions at theoptionsinsider.com if you don't like the old social medias or live chat or the old website feedback form. A lot of you guys like to use that, too. So all sorts of places. We got lots of interesting ones this week all over the place. This first one kind of intrigues me. I saw it when it first came in, and I've been mulling it over. I still don't know if I have an answer for it, which means it's kind of an interesting question. It comes from Liznder, easy for me to say, and they want to know if you had to start over with learning about and trading options, what would you do differently? When I first saw this come in, and I thought about it, and I'm still hard pressed to think of something I would do differently, just because the way I kind of came up in this business is a good way, quite frankly, to learn about options. I still would hold it out as the best path for really getting to know the nuances of this product, which is to be thrust fully immersed. It's like learning a language. You get immersed into, you go to another country and you sink or you swim. Getting thrust into the trading pits of the SIBO was a good way to do that. You sank or you swam and you learned how these products work. And more importantly, as a market maker, the function was you weren't hedging your own positions, at least not always. Nowadays, that game has changed. But back then, you were getting positions from customers, usually ones you didn't want. And so you had to figure out ways to get out of them and survive and spread and mitigate risk. And that was the key. It was how to mitigate risk. That's really what the training was risk management. And that's something, if I had, an alternate path that would supersede that, I'm hard-pressed to think about that. So all that a long way around to saying, I thought about this, and I still don't know if I have an answer for it. So I'm going to mull it over some more. I'm going to toss it over. Let's start, I don't know, Mr. Meatball. You have any thoughts along these lines for Liznder here?
I think you kind of hit the nail on the head, Mark. I'm not here to reinvent the wheel. I think listen to what Mark just said. That would be what I would add.
Those are just
listen
good words.
To Mark.
That's good advice for life, I think. Just listen to what I just said, and then you'll find the wisdom.
Listen to what Mark said, and then you'll be happy.
There we go. See, rare moment of agreement. And I knew you're playing with the pun on the wheel. It worked. Very well done, sir. Because we just did a whole segment about the wheel. Mr. Uncle Mike, sir, you got anything you would change differently?
Well, in my day, we really didn't have the floor. We kind of did, but it was everything from when I actually looked into getting into it. Everyone was saying it was going to be dead in a couple of years, so it just didn't seem like a good career move for me. So I just the way with which I learned was while I was being cut from professional football teams, waiting for a phone call, I had a job substitute teaching. And at the time, I was weighing over 300 pounds. And for those of you that have ever been a substitute teacher before, you got to be a jerk to the kids or you're going to get walked on. That's just the fact of life. So I would stand up in front of classes and I'd say, "You will do your homework. You will be quiet." And I'd have an hour of silence. And then I would find some way to get into the teacher's internet on their computer, because that was before the days of cell phones. And I would just try and teach myself as best I could.
With glitch in the site.
With that, that's in a lot of ways how I learned. But one thing that I would do over again is there really weren't a lot of good educators at that stage of trading. There was the cab driver that some of you may remember. He was one of the big guys out there. But there really weren't a lot of ways to learn about options without shelling out $3,000 for a seminar. Now, thankfully, I never did back at that time of life. But if I could do it over again, I would do stuff through Sebastian's service, to where you just pay $100 here and there to learn about a few topics that you're trying to learn about. The amount of information that's out there right now is unbelievable. And, there's times that I'm just trying to teach myself how to trade, that all of a sudden I wake up one morning with $50,000 in the account in parentheses because of a margin call. I'm like, oh, these things can actually go against me. And I'm willing to bet at some stage in the Sebastian/Giovinazzi training, there's probably some section that says it can go against you, stupid. And I really didn't have that embedded to me. And for less than an eighth on a 10 lot, as one of the employees of the option pit might say, if you can have that ingrained into your brain, that's something that would have saved me a lot of money early on in my trading career. And I'd recommend getting some type of education and starting small.
Well said, sir. That's interesting. We have kind of it's a related question, I guess you could say, from Tamavil. Sounds like a pharmaceutical. But Tamavil, kind of related, we're talking about the exchanges. He says, does it make sense for an active trader to become a member of the exchanges anymore, or are those days gone? Those days are pretty much gone. You get the good sign of that, and the value of trading as a member on the exchange is that you can get those leases now for nothing. They used to be $20,000+ a month, and you had to wait many months for the privilege of getting your hands on one of those leases, let alone buying them. So that shows you when the underlying economic value of having that is high, those things are trading for a lot, and not just value, because now their value now is disassociated from the actual economic activity of the exchange in terms of being a member. Now it's a for-profit company. Look at SIBO or CME, take your pick. There's market data, there's other products going up, there's VIX volume, and nothing to do with being a member. So these things are all completely disassociated from the core function of coming to the exchange and being a member. So all that long way around to saying mostly no. There are some caveats. In fact, I think Mr. Meatball, you guys recently, one of your members became a member in exchange. Did they not? How did that work out for them?
Yeah, he's still there. He's doing real well. I've been real pleased with him doing that. Now, he has some special skills that made it a really good idea, but we don't openly encourage that. But for him in particular, it ended up being a good fit, and we're really proud of what he's been able to do.
Yes, that's the only story I can think of someone going back the old way in quite some time.
Yes, I think it's also a good example of how good we are at what we do.
There you go. See? Crafting
There's
old
that.
school market makers. There you go. 2 plugs for Option Pit in the same segment. Crazy how that works. All right, let's keep on rolling into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. I touched on the earnings that are still popping off this week earlier in the show. In case you missed it, it was FedEx and Oracle. They're popping off later this week. Both of them actually after the close today. So we'll know about those very shortly. The rest of the week, not a heck of it. There's AutoZone if you're into that. Oh, Cracker Barrel for those of you into the food sector there. Red Hat coming up on Wednesday and Thursday. Micron after the close. And not a lot else on the earnings front. Let's go back around the horn. Uncle Mike, we'll start with you. What do you keep an eye on for the rest of this week, sir?
I just seen to make sure that I'd mentioned how we're at above what appears to be new support levels on the S&P right now from the resistance that it was put in back in January, and wanting to see if we can continue to do that. And as always, this is these last couple of years, you can kind of call this the era of the Twitter market. So watching a certain someone's Twitter account to see what the latest updates will be on trading.
Must be hard for you who does not have a Twitter account to do such things, sir. If only we could get you in the 21st century. If you had an account, you could vote in your own poll.
Ooh, that's an idea. I actually do have an account. I'm just not very active on it.
You should use it just for voting, if not else, sir. All right, and Mr. Meatball, same question for you. When you're not busy out there crafting the next generation of market makers, what are you keeping an eye on the rest of this week?
I'm keeping an eye on kind of trade and volatility and what the next few days produce. We're getting closer and closer earnings season again, believe it or not already. But I really want to keep an eye on Amazon. It's really interesting whether the story of them potentially breaking into 2 catches some legs and how the stock moves. That could be fascinating. And then I'm watching obviously Apple. I think for a company that's been moving around like it's moving to go absolutely nowhere over that period of time is really interesting. Finally, I'm going to be watching out for the Fed next week. That's coming as well.
The Fed may be coming, but unfortunately we are going. That music means we have come to the close of another exciting journey through the world of options. Talk some Amazon, talked some of the old Trump trade war, will they, won't they dance, a little bit of VIX, a little bit of Tesla, a little bit of a bunch of other call-palooza in the old odd block. Got your wheel love in, a.k.a. the triple income strategy over there in the old strategy block. And you got your questions about learning, trading, and becoming exchange members. All sorts of fun stuff on the show. That's why we love hearing from you guys, too. You take us in weird directions we would never anticipate. Keep them coming. Keep the questions coming. Keep the poll answers. All that fun stuff. We do like to hear from you guys. Let's go back around the horn one last time. Let's start with the old Uncle Mike, sir. Uncle Mike, what's cooking in the land of St. Charles, a.k.a. the land of the fox?
All sorts of things. We are actually getting all geared up. I'm heading down to North Carolina, speaking at Duke University on October 10th. More information on that will be posted on my Facebook page, hopefully by the end of this week, for a sign-up. And if you have any interest in working with a financial advisor who actually knows the origins of the greasy meatball, give me a call, 312-212-3531, or shoot me an email at mtosaw@stcharleswealth.com.
stcharleswealth.com, a.k.a. the site with the fox. Check it out. Click on the fox. See what happens. You never know. All right. And Mr. Meatball, same question for you, sir. If they want to learn about these classes, and maybe they want to become a member of an exchange themselves, where should they go? What should they do?
We're doing Options Made Easy. You get our 5-part, it's going to be probably 8 hours of education. You get a month of access to OptionPit Live and a free mentoring session with me. Go to optionpitmembers.com/EasyO to get yourself registered. This will be money well spent. If you take the class and you hate it, I'll give you your money back.
There you go. No, else gonna be giving money. It looks like Mr. Musk finally sued by that diver he called a pedophile. So there you go. More Tesla fun to throw into the stew and stir it up. Check it out over there, optionpit.com. If you want to learn how to maybe make some money off all these volatility swings in Tesla and every other name out there, optionpit.com. To learn more, and on behalf of the Meatball and Uncle Mike and myself, thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do. Keep them coming. We'll stay tuned to the network, actually, live this week. Let us up hitting the live feed, Mixler feed. We'll have Advisors Option coming up. Bunch of interviews, bunch of other stuff like that. So between now and the next option block on Thursday, we'll keep you busy. Grab the Mixer link, set it and forget it. We'll keep you busy. And then we'll see you next time for the option block on Thursday.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.